Hello everyone, welcome back to the channel. Just a quick disclaimer before we begin. This video is for information and educational purpose only. Please do your own research or consult a professional before making any decision based on this content. Thank you.
Today, we are exploring Opendoor Technologies, identified by the ticker Open, which is a technology-driven platform seeking to transform the home buying and selling process. Operating as an iBuyer, Opendoor extends immediate cash offers to homeowners, purchases properties, manages essential repairs or improvements, and subsequently resells them. In addition to this primary business model, the company provides MLS listing services, as well as title, escrow, mortgage, and insurance services, effectively striving to integrate various components of the residential real estate transaction process. Over the last 10 years, Opendoor has broadened its reach into numerous U.S. markets and enhanced its technological framework to bolster pricing strategies, transaction workflows, and logistical operations. The company is banking on the appeal of efficiency and certainty, allowing sellers to avoid the hassle of showings or uncertainties associated with listings, to attract a sufficient number of homeowners for scaling purposes. Nevertheless, this model requires substantial capital investment. Opendoor maintains an inventory, incurs holding expenses, funds repairs, and faces the challenges posed by fluctuations in real estate prices, elevated interest rates, and illiquidity in sluggish markets. From a financial perspective, Open has demonstrated a record of considerable losses, with profitability still appearing as a distant objective. Its revenue patterns have varied greatly. Certain years have recorded billions in home sales while simultaneously incurring net losses reaching hundreds of millions. An analyst observed that the net loss over the past year exceeded $368 million, illustrating the high costs associated with maintaining liquidity and scaling inventory management. In 2025, the business encountered challenges posed by a sluggish housing market and tight mortgage rates, both of which dampened transaction volumes and heightened financing expenses. Recently, the trajectory for Open has shifted dramatically. The stock price has experienced a swift rise as retail investors have started to treat it similarly to a meme stock, which is partly fueled by demands for the return of co-founders, changes in leadership, and a revitalized narrative regarding the evolution of real estate technology. Co-founders Keith Rabois and Eric Wu have recently returned to the board, while Kaz Najatian, the former COO at Shopify, has been appointed as CEO, developments that have ignited a wave of renewed optimism and fluctuations in stock prices. Short interest remains elevated, and the presence of institutional investors is gradually increasing, contributing to significant intraday price movements. In conclusion, Opendoor represents a speculative and high-volatility investment at the intersection of real estate and technology. The potential for growth depends on the company's ability to enhance operational efficiency, manage capital costs, scale transactions successfully, and fulfill its ambition of streamlining the home trading process. However, considerable risks persist. Housing market cycles, financial pressures, challenges in execution, and shifts in investor sentiment may all threaten the current enthusiasm surrounding the company.